Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, another day of extreme volatility. We, broke below that 24,350 mark even, in the first half of the session. But we made a good recovery since then. Off day's low, just around that 24,400 mark. We didn't really end above that, but just at 24,399 or thereabouts. And if you look at the Sensex, that also managed to defend that 80,000 mark. But Yatin, month to date, markets have shed over 5%. I don't think we've seen this kind of selling since COVID, have we?
Correct. And Nandita, every day the market tries to move higher. Same thing happened yesterday. The same thing happened today. That we open with some strength. There is hope in the market that probably today will be the recovery day. But, we fall, intraday with clearly large caps, not supporting. In fact, the earnings for the last 3 or 4 trading sessions also have not been great. Some day it's IT falling, some day it's, FMCG falling, some day it's Reliance falling. So I think sectorally also we haven't seen strength in earnings, and post the earning reactions have been brutal. When can you see HUL falling 7%? When can you see Reliance falling by 7-8% post the EGM? So I think the market is consolidating, and clearly the consolidation is not limited to large caps but also to mid caps as well as small caps falling, trapped to that selling pressure.
That's true, Yatin, but banks have emerged as a comfort corner for the market, right? Today, both the Nifty Bank Index and PSU Banks Index also were in the green, providing some kind of support, at lower levels. Aside of banks, what did well was pharma. Yesterday it was among the top laggards sectorally, but today it managed to stage a comeback. FMCG, as Yatin you were mentioning, was the top laggard. Of course, a 7% drop on shares of HUL, weighed heavy on the FMCG pack. All the other stocks also like ITC, which will be reporting numbers later in the evening, and other names like Britannia, Nestle, all of them came under pressure. Realty and autos were the other pockets that saw selling pressure today as well. In terms of gainers on the Nifty, you had UltraTech cement, that was of course holding out today. Shriram Finance, Titan, Grasim, SBI, the big one, that lent some strength to the PSU Bank Index, and M&M from the auto pack did well. But what didn't do well aside of HUL were the likes of SBI Life, which reported numbers yesterday. I think Hindalco, we'll be talking about that in greater detail. There's been some setback for Hindalco in terms of global earnings and how it will impact the industry per se. Nestle India, as I mentioned, Bajaj Auto once again in the red, and other FMCG names. But Yatin, from the broad end of the markets, yesterday we were talking about how mid-cap IT is doing extremely well. Coforge, Persistent, all of them were high flyers yesterday. But today on the downside, you have KPIT Tech. That was down somewhere around 12 to 13% on the back of a revision in its guidance for FY25.
Absolutely, and the European market looks weak, and probably the reaction there. But we also had VIP Industries, which reported a surprise quarterly loss versus a profit last year, same quarter. That stock fell 7% post weak numbers. We had Dr. Lal Pathlab reacting to the numbers, 6% down, and Escorts, Mota, and that stock we'll talk in detail. But it dipped as much as 10% intraday. Some recovery intraday, but yes, the stock was under pressure. What did do well is Sona Comstar after buying the railways division of Escorts. That stock saw a 13% move. Aster DM, Adani Wilmar, Adani Total Gas. So few Adani mid-cap stocks doing well in trade, and PPL Pharma, that stock also on huge volumes saw 18% surge coming in.
All right, of course, those were the names that were moving and keeping the mid-cap end of the markets active. But let's take a look at some of the stocks that are on our radar. FMCG, HUL being the big one that is on my radar this afternoon. There was a big disappointment when it comes to the volume front. Expectations were ranging from 4 to 5%, but the FMCG major handed in a volume growth of 3%, and that I think was the major disappointment, because in terms of revenue growth, although it was marginally below estimate, it did meet expectations, so to say, when it comes to profitability. In terms of segment also, home care business saw good growth, and beauty revenue was also in line. But, home care business, personal care business and food and refreshment business, which gets impacted by inflation, right, and slowdown in urban demand. These are some of the segments that remained under pressure. And that was the kind of trend that was emerging from the other FMCG earnings also that came out, slowdown in urban demand. And that continues to be a trend for the entire FMCG space. Aside of that, we'll talk about the management commentary also in a bit. But in terms of the ice cream business, they will be separating it, and the mode of separation, call on that will be taken up by year end, because ice cream business typically is 3% of HUL's entire business, and it is a high growth but low margin business, and options are either to sell the business or to demerge and list it separately. This call will be taken up by year end. But in terms of the management commentary, not great in terms of margins. They've said that EBITDA margin will remain in the current range in the next quarter or in the near term as well. And I think that was also a disappointment. Although they have said that there have been some recovery in the rural markets, but slowdown in urban markets is there, even though it is seen as a near term phenomena. So there is growth in smaller cities, but larger cities are seeing some bit of slowdown, and that has of course been a trend that we have seen across FMCG numbers. But let's talk about what the brokerages have to say. JP Morgan has maintained an overweight call. Target price, however, has been cut to 2,870 rupees. They've also noted that the slowing urban demand is casting a shadow on the near-term demand outlook for the company. Volume growth, of course, missed estimates, and they have lowered their FY25 to FY26 EPS estimates by 3% on the back of marginal moderation in revenues as well as the miss in volume growth. In terms of what Jefferies has to say, they've also maintained the buy call. Target price is a little higher, 3,130 rupees. Rural recovery is there. There are signs of that happening. But demand trends are likely to remain, at current levels in the near term. That's what Jefferies has pointed out. But some bit of boost may come in from product pricing, if there are some changes to that. Morgan Stanley, on the other hand, has an underweight call on HUL, and target price is lower at 2,110. They've also noted that volume growth was weak, and personal care and food and refreshment business will remain an overhang going forward. And if there is a price growth, that will be in low single digits in the third quarter. That is also something that Morgan Stanley has mentioned. Stock is down somewhere around 10% in the last 3 months, Yatin, although we saw FMCG stocks make a comeback right after elections. But now, with the kind of earnings that are coming in and concerns over slowdown in demand in urban areas and cities, that upbeat sentiment that we had seen is kind of fading for now. And of course, as I mentioned, stock is down 10% in the last 3 months, and the going could remain a little rough for the company as well.
I think, the key takeaway from this result was that the urban slowdown, is quite evident, and it is here to stay. I think that the trend which has been seen for FMCG companies, be it Nestle, be it HUL, and ITC also reports numbers, Godrej Consumer also reports numbers today. So we'll watch out for that trend, because if urban slows, I think a lot of FMCG companies would see some bit of derating or stock pressure in the near term. But yes, pressure in all of these FMCG stocks since the results have come in. But shifting gears from FMCG to autos and Escorts Kubota, clearly the accident of the day. 10% low for that stock, recovered in trade, ending the day by nearly 6% lower. And the reason for here was the sale of the railways business. Now, the railway business was sold to Sona Comstar, which is again a listed company, for a total consideration of 1,600 crores. And this slump sale, which happens at a EV EBITDA of nearly 8 times. Now, brokerages believe that the railway business was a very high market share business, especially for the railway braking system and safety control systems. There is a lot of entry barrier. And selling this at a cheaper valuation has probably hurt the Escort earnings as well as the overall expectation of valuation for this railways business. Now, if you look at the brokerages, they saw this transaction happening at a P ratio based on FY25 earnings at 10 PE. But most of these railway stocks, be it Titagarh Wagon, be it rail PSUs like RVNL or RITES, most of them trade at a P multiple in excess of 30 times. So 30-35 times is the average industry PE. And the transaction happened at 10 times. Most importantly, the transaction will be EPS accretive for Sona Comstar from day one. So if you look at Sona Comstar stock, that went up 15%. But on the anticipation that this deal was slightly lower in terms of market valuation or the expectations of valuation, the shares of Escort Kubota fell. The only two big things from this transaction, which is good for Escorts Kubota as per Nuama, is that number one is that they'll be able to focus only on the core agri equipment business. Number two is because the kind of cash that they have on the books, the dividend payout could increase in the short to medium term. So these are the two positive takeaways. However, Nuama believes that the divestment of the high margin railway equipment business, where the return on capital employed was 35%, was slightly lower than the market expectations. They have reduced the FY26, FY27 EPS by 5 to 8%, factoring in lower income from the high margin railway business. However, they maintain a buy with a target of 4650 on Escorts Kubota.
That's true, Yatin. Divergent moves, of course, on stock prices of Escorts, Kubota and Sona BLW, given the fact that Sona has struck this deal at a good valuation, and of course the fact that it will be EPS accretive for the company from the very first day itself, and of course the acquisition that they have made, the company that they've acquired, it is the market leader in rail braking system, so the company will benefit from that as well. But aside of that, the other, I wouldn't call it accident of the day, because the stock recovered from lows and ended lower by just about 4% or thereabouts. Hindalco at one point was down almost 7%. Managed to pare some bit of losses, but the trigger here is French aluminium maker Constellium reporting weak set of numbers for the third quarter, and that stock saw a 28% slump in the US market last night. There's been a rub-off effect on that, and there are concerns because it impacts Hindalco's arm Novelis, because it operates in the same segment as Constellium. Now, shipments by Constellium fell by as much as 5% on a year-on-year basis and 7% on a sequential basis, and adjusted EBITDA for the company also fell by somewhere around 41%, Yatin, on a quarter-on-quarter basis. This doesn't really spell very good news for Novelis, as it operates in the same segment, and the company has cited poor performance in the aerospace and automotive sector. There's been clear weakness in demand in the US as well as European markets, and that has played spoil sport, and there was also disruption caused by flooding at its Swiss facilities. So these are some of the sectors, some of the reasons rather why Constellium saw weak earnings, and that could impact Novelis also, because experts say that Constellium's performance serves as a key indicator as to how the industry will perform and what kind of outlook is there, and weak results from Constellium will be a cause of concern for Novelis, which in turn will be a cause of concern for Hindalco. Because there could be similar challenges for Novelis, and automotives is the most profitable segment of Novelis, which by the way is accounts for 20% of the company's volume and a larger share of its EBITDA, Hindalco's volume and EBITDA. And it will be quite vulnerable to the demand fluctuations in the automotive sector as well. Street is taking this very seriously, even though let's take note of the fact that Alcoa gave positive commentary during its earnings, and stocks reacted to that as well. But there's some bit of silver lining as well, because the commentary on packaging from Constellium has been positive, and Hindalco has a larger share, 60% plus in this segment. So a month to date, of course, share of Hindalco is down 10%. Numbers will come out on the 11th of November. So we'll be watching out for numbers from both Novelis and Hindalco. But for now, Street has been spooked. They have been a little cautious also about how things will pan out in terms of earnings for Novelis and in turn for Hindalco.
Absolutely. And the stock of Hindalco recovered in trade, but yes, there was some overreaction in the first half an hour of trade.
Well, that was that then. All those stocks were on our radar this afternoon. Of course, IndusInd Bank also reported numbers. By the looks of it, net profit was below estimates. Of course, the street will be digesting the numbers tomorrow when markets reopen, and let's see how the banking pack really reacts to that. But for now, we managed to cut some losses and end the day around that crucial 24,400 mark. Let's see how trade really pans out tomorrow. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Have a great evening and come back and join in tomorrow morning.